Distinguished guests, ladies and gentlemen, welcome back and I hope you enjoyed the short break. For the next session, it is my honor to introduce to you Professor Philippe Martin, member of the Cercle, the économistes, Dr. Prakash Kannan, head of Total Portfolio Management of the GIC, Professor Béatrice Weder de Mauro, professor of INSEAD, Dr. Philippe Ithurbide, Global Head of Research, Analysis and Strategy at Amundi, and Mr. Taimur Baig, Managing Director and Chief Economist of the DBS Bank. We will now begin the session on who will lead the world economy.
Good morning and welcome to this session on who will lead the world economy. I'm Philippe Martin, I'm a professor of economics at Sciences Po, and I'm also chairing the Council of Economic Advisors, which is attached to the Prime Minister. So it's a big question. I'm sure one thing that we may not answer the question, but I'm sure of one other thing is that we are very fortunate to have 4 leaders here who are leaders in their field, and we're very fortunate to have them and answer this big question. So let me start with a little bit of historical perspective on leadership in the world economy. Economic historians tell us that in the 18th century, the world economy was much more balanced than it was in the 19th century. And in a sense, we know that Europe, Asia, and in particular India and China were at par, or even some historians would say that India and China were ahead in terms of exports of the big manufacturer at the time, which was textiles. And then you have a big technology shock, which is the Industrial Revolution. Economists and historians still debate what happened at the time, but in a sense, and that relates a lot with the previous debate. The technology shock was clearly the source of the big divergence that started in the 19th century, where Europe took the lead. And then by the end of the 19th century, US was clearly becoming ahead, even though politically and financially Europe was still a leader. And there's a theme that I think maybe we'll come back to, which is hysteresis, in the sense that it takes some time and maybe some big shocks, technology shocks, political shocks, to have a shift in the leadership. And as we know, that's what happened, of course, with the 2 world wars, where the shift went towards the US, politically, financially, economically, and that of course, was super important. And then we have another technology shock. We clearly talked a lot about it with the digital economy, and the paradox is that this technology shock is coming from the US at the same time as the shift in terms of economic leadership is shifting, indeed, is going towards Asia and China in particular, and that's a big question, of course, I want you to answer. So leadership has many dimensions, and I want you to touch, if you can, on all those dimensions, economic, obviously, but also technology, political, maybe also culture and soft power is important. This is something on which us Europeans, we talked about rules, regulation is super important. To what extent also this shift in leadership from US hegemony to something that looks like maybe more like duopoly or multi-power structure, is it more stable or less stable? What are the kind of rules that we can envision in such a situation? So there are plenty of questions that I want to hear you about, and in particular, we talked about institutions and norms. So what are the right institutions in this type of new structure of economic power? And clearly, in terms of the dimensions, the shift is not taking place at the same pace for different dimensions: finance, economics, technology, politics, etc. So let's start with a few comments from you, and I'll start with Taimur, maybe with 8-10 minutes of your comments, and then the different panelists. Thank you so much.
Thank you, and good morning, everybody. Pleasure to be here. I hope most of you were here for the earlier session, which was utterly fascinating. Look, the contribution to global growth, there is no question. China has been contributing 30 to 35% to global growth for the last decade or so. So from that perspective, just from a delta perspective, China is leading the world. If China slows, the world would slow. If China accelerates, the world follows. No question about that, but then there's a question of the China's GDP. Do we really believe the numbers? And have the introduction of modern technology made GDP measurement particularly challenging to begin with? So let's put GDP aside, because you can always say they make up the numbers, we don't believe it, and that kind of stuff. I think easier way to measure who leads the world economy would be sales, because you can't really make up the numbers. Listed companies have to have audited accounts, and they'll tell you how much they sell where. The number that I am interested in is 5 trillion, and that is the amount of forecasted China retail sales for 2019. 5 trillion, that is 16 times Singapore's GDP. So China is expected to overtake the US in retail sales this year. The biggest market for autos, the biggest market for cell phones, for commodities. There is no questioning that data. That is published by listed companies with audited accounts, and China is the biggest market for retail sales in the world, and it will remain so, regardless of what your view about China's growth trajectory and where it goes. So from that perspective, I don't think there is any ambiguity about who leads the world at the margin in terms of flow of demand. But is that all there is? What about the fact that leadership is defined by the innovation, the dynamism of your companies, and maybe going a little further, the quality of your brands? Who leads the world in brand quality and brand value? No contest, the US. If you look at the top 100 brands in the world, the US has majority of them, 50 to 60%. Europe follows with maybe 10, 15%. China is a distant third with like maybe 5 or 4 companies from China that are in the top 100. So from a brand leadership perspective, there is no question US companies and their innovation and their introduction of product lines have been and are unbeatable from a global ranking perspective. But what is interesting, however, is if you go beyond the 1 to 100 ranking and go to, say, 1 to 300, then all of a sudden you start seeing a lot of Chinese brands. So again, the top 100 tells you where we are. I think the top 300 tells you who are going to be the next round of big generator of brand value. So if you saw the World Cup last year in Russia, you would not have seen too many ads of Alibaba or Tencent. They think that, they're, first of all, they're massive footprint in China. Their brand name is becoming visible around the world. They didn't want to spend money advertising during the World Cup. But there were a lot of Chinese companies advertising, Hisense, Wanda. So these are not on the 100, but they're in the 200 or 300 listing. So you have a lot of aspirational brands from China that are beginning to lead in terms of technology, in terms of innovation. If you go for straight out current data, there's still nothing compared to the top American brands. The Disneys and the Apples and the Googles of the world tower over them. But maybe we should not be looking at where we stand now, but we should try to project forward, and we should see who has the momentum. So for me, from that perspective, again, leadership is a tough question to answer. Your data should not be just backward looking, you should try to look forward. And from that perspective, I think not only do Chinese consumers are generating the greatest demand for retail products in the world, but Chinese companies on the margin are also the most interesting and exciting. The other way to think of leadership is who's setting the rules of the game around the world. And there we seem to have a decent multilateral framework, which unfortunately has been unraveling lately. But I think this is where Europe comes in. And I think the classic example is the Huawei story, where even 6 weeks ago, every time I spoke with somebody from the State Department, US State Department, or a client who was from the US, it was crystal clear to them that Huawei was heading in the direction of ZTE, that they were facing an existential threat. All the Western countries would band together to restrict Huawei from entering the 5G space, and this is it. How things have changed in the last 6 weeks. Now you've got the Europeans, the ASEAN countries, even the Indians basically saying, you know what, we sort of ran the tests, and I think the risk is there, but it's manageable. And we can hold Huawei's feet to the fire if it comes to risks of espionage. And therefore, despite the US's demands to trust its hegemonic power on this issue, it's not really working out. And I think it's because it was helped by the fact that Europe was acting as a nice counterbalance. The US ambassador in Germany is a rather colorful character, and he sort of goes even more zealous than Trump time to time in terms of trusting his views on the German authorities. So he has been busy sending threatening letters to German companies, to German politicians, saying that you better be careful, don't play around with Huawei. It's a big risk for Germany. Nobody cares. The fact that the German security apparatus, the technology people have basically said we can deal with Huawei is good enough. Same thing for the UK. I would have thought, given all the Brexit uncertainties and pressure, the first inclination for the Brits would have been to say, I joined the US in pushing back against Huawei. Not the case. And now you even see Trump talking about how he wants a level playing field and he wants American companies to compete with Huawei. So the narrative has shifted very, very quickly. And this is where I think the limits of US hard power come in. You can measure in military might, in economic might, and always come to the conclusion that the US leads the world. But leading the world means also having a veneer of soft power, which allows you to form consensus and move the global agenda or global dialogue. And I think that in that area, the US is slipping. So I think looking at just data, very easy to say US leads and will probably lead for a long time, given its military power. But I think the fact that even in areas where the US has made a very strong push in the last 6 months or 1 year, and the pushback that it's been getting tells you that A, China is not friendless, and B, that the Europeans and there are many other sort of Western peers of the US who are not necessarily willing to go with everything that the US wants them to go into.
Thank you. You alluded to something which I think interesting. Implicitly, I think when you look at the question, most people think we're talking about sovereigns, about countries, but actually who will lead the world economy also in terms of global firms and maybe not sovereigns anymore. So I think that's an interesting case. Taimur?
I think you meant Prakash.
Oh, sorry.
Thanks, Philippe. So I think, it's always a challenge to have 4 people answering the same question. And I think it's probably the worst challenge for whoever gets to be number 4 to try and say something different. But I'm going to try and say something a little different. And the way I'm thinking about it is I think the challenge going forward is not going to be a question of who is the leader, but it's going to be much more a question about how, and a question about how economies are growing. And I can give three points that I think are going to be important. The first one is that the nature of growth going forward has to be more sustainable. And there is obviously a climate change aspect to this, but even in terms of a financial stability aspect, which I think there's a session later on today. So if you take in the current context, if China, instead of pursuing a relatively prudent economic stabilization measures as it's doing right now, if instead it was to say, let's go back to a credit-fueled impulse, going back to that $4 trillion stimulus that they did in 2010, numerically, China would be the leader, at least for the next couple of years. But is it sustainable? And is it in the long run something that would actually be of more concern to this part of the world? I think that answer is yes. So I think there needs to be a lot more emphasis about how countries are going and whether that is sustainable or not. The second reason why I think the emphasis on how is more important is that the nature of growth needs to be more inclusive. I think what we have seen over the last 5 years or so is that there are large segments of the population who just feel like they haven't participated in the kind of growing of the pie. Now, in this part of the world, in ASEAN, the strategy has always been about growing the size of the pie. And when you think about kind of people's happiness, if you will, there are two dimensions, right? You have a time series dimension, and then you have a cross-section dimension. So the time series dimension basically says, am I better off today than I was yesterday? Whereas the cross-section dimension says, am I better off than my neighbor? And actually, there's a professor at Harvard, Benjamin Friedman, who basically advocated that these two things are substitutes. So if you're happy on one dimension, you can actually you're okay. You can ignore the second one. And I think the challenge for growth in places like the US and even some parts of Europe is that we haven't been seeing for the median earner or even sometimes the lower quartile growth in the time series dimension. And once you don't have growth in the time series dimension, suddenly you care a lot about the cross section. You care a lot about on that fixed pie, who is eating a bigger slice. So I think that that focus in terms of not only growing the overall pie, but really making the nature of the growth much more inclusive, I think that's going to be the more important question than really about who's growing the fastest. The third one, once again, what I think is the how in a way, is to use a little bit of finance parlance. In investment, you always think about what's beta, what's alpha, right? So beta is basically your leverage to the market, and alpha is kind of your outperformance. I think it's important for the peripheral economies, whether it's ASEAN, whether it's kind of the smaller countries in Europe, we will always have a beta to global growth, right? So if the US does well, if China does well, ASEAN will do well. The question I think is how do you maintain your alpha? How do you make sure that relative to the other countries, you are performing better? And I think this is where the emphasis on reforms really need to be made more evident going forward. I think we have over time enjoyed the fact that the rest of the world has been growing fine. But if you look at most estimates of trend growth going forward, whether it's in the US, even in China, everything is on the decline. So if economies, especially the smaller and the ones on the periphery, are really just focused on beta, which is I'm gonna enjoy growth if the rest of the world's doing fine. I'm gonna enjoy growth if global trade does okay, if that globalization trend does well. They could be in for a surprise over the next few years. And so we need to kind of re-emphasize what are the things that drive that alpha for individual countries. So when you put all these things together, I think the challenges are of a different nature going forward than it is in the past. So it's not just about the headline growth rate, but it needs to be sustainable, it needs to be inclusive, and it needs to focus on that alpha.
Okay, thank you. So I think you put the emphasis on inclusiveness and sustainability of growth. Actually, if I can follow up with just a quick question and quick answer, but you didn't tell us who you think is leading in this case in terms of sustainable and inclusive growth. That's the hard one.
No, I was going to say Singapore, of course.
Okay.
No, well, actually, this is an interesting survey, right? So this was done in 2016 by YouGov, and it was, it's much more impressive on a chart, but I'll try and wave my hands around to give you an idea of what it is. Basically, it had exports as a ratio to GDP. And then on the y-axis was an answer, the ratio of people who answered yes to this following question: is globalization a force for good? And surprisingly, obviously, this part of the world, everyone is very high on the export to GDP ratio dimension. But at the same time, almost 80 to 100% of the respondents said, yes, globalization is a force for good. Now, the YouGov study was actually even more interesting in the sense that they also had a dimension which was about the share of immigrant population. And so once you kind of control for immigration population, then actually things kind of fell a little bit more. So, there is, in this part of the world at least, still a belief that globalization is a force for good, but we've not experienced that as much globalization in labor as I think other parts of the world. And I think that's the challenge, which once you start getting more immigration and et cetera, that's where I think some of these forces that I said need to be addressed.
Okay, so we had the dimension of brands, global firms, and now inclusiveness. And I think, Philippe, you're going to talk about the dimension which is more finance and currencies in terms of leadership.
I can accept the challenge to be number 4 if we say lady third. If you want to speak
Béatrice
first.
had accepted to be number 4, so she has the hard challenge.
Okay, so you're sure? Okay, that's fine. So, of course, it's an important question, leadership, and I will look at the other flip of the coin, which is rivalry. If you ask the American who is the rival, it's very clear. Look at the report published in December 2017. It's China. It's not China and Europe and it's China. And then you understand much better the year 2018. So the reason is very simple, because in fact, if you look at the situation, China is emerging in plenty of topics. So we developed 2. The first one is about power. What is the power today? And the second one is about the currency. I forgot to mention that Europe recognized China as a market economy. Are we naive? Are we stupid? Are we patient? Are you less concerned? We are less concerned than the US. That's probably our intentions are pretty different than the one we have in the United States. So let's have a look on the first topic, which is about the power. And of course, power and currencies are pretty linked. You mentioned the change of center of gravity. I will not develop this, but it's very, very important. And the power in the past used to be the fleet, the army, some finance in order to finance the army, etc. But today it's a very poor indicator. We have to look at the political stability, the social consistency, the soft power, the technology, plenty of arguments which define the power today. And in fact, if we look at all these indicators, and you look at the powers, we have different powers, but by far, US today is the power, the hegemonic power. And then you have a rival, which is China, lagging behind a lot on all the indicators. And then you have the old powers, Europe. Europe is a power, but we have different powers. And for the moment, we are pretty unable to convince that we are one power, and not the addition of different powers have different views on the same topics. Brexit was interesting, because for the very first time ever, probably, Europe was united. And it was a big surprise for plenty of people. I visit clients everywhere. And at the very beginning of Brexit, they say, okay, it will be a mess because Europeans will be unable to have a view. We have a single view, and we stick on it until now, which is very important. So power is important, and stability, cohesion, consistency, governance is critical. And then you have continental power, continental state, city-states power, but at the end we have one hegemonic power, which is important. The most complete power is United States, but we are already living in a multipolar world, because we have a diversity of competitors, and if you look indicators per indicators, then you have some countries having some lead in some aspects. France has some lead in some aspect, Russia has some lead in some aspects, for example, the army. China has a lead in terms of demography, in terms of production, in terms of plenty of things. But at the end, we have one power, and one complete power, and by far. The second topic is about the currency. When do we stand exactly? History records a couple of things. First of all, we can have different international currencies at the same time. This is important, so it's feasible. Second, to have an international currency to emerge, we need probably a shock somewhere. And somewhere, of course, in the leading economy. So what Mr. Trump is doing now is probably important for the dollar as a reserve currency. And it's probably an important message for China and for Europe. And third, to be able to substitute to an international currency, we need a couple of characteristics: predictability, stability, and liquidity. And this is a very important message for China. European market is liquid but fragmented. The Chinese market is rising but is not liquid enough. So we have a couple of challenges to consider for Europe and for China. But what we know is that to be an international currency, we need a big country, we need a liquid market, we need a depth in the financial markets, we need financial stability compared to the other countries, we need a better fiscal fundamentals, we need a large value of transaction, we need the freedom of capital movements, we need military power. And if you look at China, in some aspects, China is very, very, very late compared to Europe and compared to the United States, of course. So the challenge for China is definitely to open the capital account, convertibility of the currency, to have financial stability, to have development of financial markets, and particularly the debt market. So for the time being, we are miles away from this situation. Please note that the bulk of the factors are long-term, while financial stability and stability is a short-term factor, which might change the rule of the game. Remember, in the 70s, when the dollar devalued twice, we had a multipolar currency world. It didn't last because there was a lack of volatility in the other currencies. So let's have a look now at what is required for Europe to have the euro being more international. The first one, the first criterion, which is important, I don't want to develop what has already been said, but in fact, the first criterion which is important for the euro is definitely to consolidate the euro area institutional setup. For example, European Banking Union is not finished. The Capital Market Union is not finished either. There is no real fiscal union as well and fiscal coordination. So once we develop this, there will be a good chance for the euro to gain ground in terms of international currency. The second, which is important as well, is unlike the People's Bank of China, unlike the Fed, the ECB have not managed a lot of currency swap with the other central banks. It's probably not a mistake, but if we want to favor euro as an international currency, it would be interesting to have this kind of huge level of swap between the central banks. Third, which is important, is the governance of the euro area, and particularly on the economic setup, particularly in the financial setup. We don't have a federal bonds, which is a problem compared to the US. We have a very fragmented market, and this is a drawback for the euro to become an international currency. And last but not least, which is important, is to pick one voice. And this is very, very important. And for the moment, Europe is not doing that extensively. And last point, which is the very last one, to have a common defense policy would be helpful. We know that when a country has alliances and is the umbrella for the other country, the use of a currency as a reserve currency is much bigger. We tend to estimate in 30%. So if we don't have that, it's very difficult for euro to gain ground in the foreign exchange reserve. So to conclude, what can we do? Of course, we can improve the governance, but we have to wait for something in the United States as well. First risk for the US dollar, the twin deficit. Do we consider that US will be able to finance the twin deficit forever, very easily? No, certainly not. Foreign exchange reserves are declining, foreign exchange reserves are diversified, and the capacity to attract capital flows to finance the twin deficit is diminishing. Second, if you look at the Trump external policy, any withdrawal from international organization means that the umbrella of the US would diminish, and which explains why some countries will continue to diversify. So this is a risk for the dollar. So to conclude, in terms of power, we are living in a multipolar world, definitely. US by far is the only complete power, and we can still talk about hegemonic power. And even in China want to emerge, then it will take time, and we have to be very patient. On the currency, China, we are miles away from the yuan to become an international currency, even if we have a huge improvement in the situation. We need time. Americans are not patient. Europeans are. For the Europe, there are a lot of conditions, as I said, on the governance, on the consolidation, on the setup. And that's it. And political will in Europe will be the key. So we are a multipolar world. Euro is competing with the dollar. 40% of the world transactions are in dollar, 40% in euro, which is not that bad. But of course, China is really lacking behind for the moment.
Thank you, Philippe.
2% for the China, 2%.
Thank you. I tend to interpret the economics of use of international currencies and vehicle currencies a bit like economics of language. There's a lot of network effects, and it's very efficient for all of us to coordinate on only one language. Just imagine if we had to speak in different languages here. So that means typically that it's hard to coordinate on a new currency use or a new language because we all have to make a big change in terms of technology. It's very costly for all of us. So there's a lot of efficiency in terms of using one language, one currency, and I think it's going to take a huge shock, political, financial shocks, which we don't see yet for China. I don't think we see it for plenty of other reasons for the euro. So my guess is that a bit like the British pound was still the vehicle currency and the leading currency in the world, even after the UK was not anymore the leading economy. We might see that for the US dollar, but potentially we could have a big shock that indeed changes the equilibrium, but the equilibrium is there to stay, I guess. Béatrice, you have the the hard challenge, but I'm sure you're going to be very successful.
Well, you know, we Europeans, we like order, and the alphabet is one of the orders. So I often get the privilege of getting the last word with my last name, starting with a W. I can't resist making a remark on this last point about languages and currencies. While I fully agree with you on the currency and how big a shift it would need, it's interesting that there might be technological changes that would imply that there could be quite a quick shift and diversification. I'm thinking of, in terms of the languages, we have now all coordinated on English, but what if there was a perfect translation that everybody could just have in their ears and, you can speak whatever language and we all sort of, hear our own language. I mean, that doesn't seem to be like light years away, and it might mean that lots and lots of additional people actually can enter the international economy that are now kind of obstacled by the language. And on the other hand, it means for those of us who have learned English that this kind of advantage would diminish. So that's one of the sort of side remarks that I couldn't resist making here. But let me get to my points about who is going to, who is leading the world and let me make it in three points. The first one is what actually has changed and why do we find ourselves today in such a different situation than, say, 20, 30 years ago when there was an unquestionable lead of the world, which was in the West. I'm positioning, and it's actually the US. And one way of looking at this is, of course, Daniquo's beautiful way of concentrating the gravity of economic power in one single spot and seeing how that moves. Another way is to look at the income distribution of the world. And I'm going to challenge you to, your imagination to imagine the income distribution of the whole world some 30 years ago. And it would have looked, or it did look like this. So there was a very big mountain, and then it goes down, and then there's another mountain here. Wide off, there is another mountain here. This other mountain here is essentially US and Europe. So these are the rich countries, and they are not the largest part of the population. There's something in the area of about 25% of the population. Most of the population sit in this first mountain, and most of the population in that first mountain are under the poverty line. And most of the people there are in China and in India, and some in Africa. So those are with that kind of picture in mind, this is the world only 30 years ago. And how has the world changed since then? How does it look? Well, there is still this big mountain. And yes, some of it is still in China, but most of it is now in India and Africa. Then there is a medium mountain, and that's basically where China has moved to. It's basically grown into this medium side, and then there is still the mountain, the smaller mountain, because, relatively speaking, they haven't grown so much. in terms of population and in income, which is the West. And in many ways, this composition of, on the one hand side, where do most people sit and how large is their income, purchasing power, and productivity, is essentially what we are observing today. The huge shift has happened for many emerging markets, but in particular, since this is the largest one, the Chinese mountain has moved. And this is what is now the challenge, in my view, from the economic point of view, what kind of explains why the US is concerned about being number one. Well, guess what? They already lost the number one position when you calculate GDP in terms of PPP per capita. Then already China is larger than the US. And by the way, it's the same size as Europe as a whole. So the US is already number 3 in that sense. And this is not the way that the US, and obviously, you know, Donald Trump is accustomed to think about the world. And it has not been the world that he grew up in. It happened in a very short time. It happened very quickly. And it happened in some way almost without the world noticing. Partly because China did not play the other power card. So right now we have this imbalance in a way between the economic power shifting, but the military power is of course still much strongly concentrated in the US, and China starting to play more of the military power part is very, very challenging, including to this region here. So my first point would be, you know, a lot changed in a very short time, and what we are seeing right now is the consequence of this moving of the economic power. When I look forward, and again looking at, let's see where the population is going to, as one of the dimensions, where is it growing? Well, it's definitely not growing in the West. So Europe and the US together will be less than 10% of the population by 2050. But also in China, the growth in the population is not strong anymore. So China, relatively speaking, is also losing compared to India, compared to all of Africa, which is one of the biggest increases in the world population will be. So the second component then is, you know, how much are these countries going to be growing? How much, and one of the things to look at is, you know, long-term productivity growth. Here, the predictions for both Europe and the US are not very high. You know, we're talking about 1.5 to maximum 2% percentage points per year. And in fact, one of the interesting questions is in particular in the US, because you mentioned the brand and, you know, the technological leadership that we still have in many US companies, but we're also observing phenomena that go in the other direction. For instance, the fact that market power has been concentrating at a very rapid clip. Again, over the last about 30 years, it's gone up by almost 80% market power within the US. So there's a concentration which is usually not the best recipe for innovation. So let me get to my last point, Europe. So Europe is, in a way, is always surprising. It's so messy when you look at it. You know, sitting here and living here in Singapore, I realized that people look at Europe and they just shake their head, you know? Because there is always something new happening. You know, if it's not UK, which has been, you know, on a daily basis, sort of changing its mind and making headlines, then it's Italy and, you know, Salvini and Di Maio, and then, you know, there is the question, you know, is Merkel's still going to be there, and how is Macron doing, and the yellow vest. So whenever, and then, you know, you have Catalonia, and there is there is no shortage of reasons to be pessimistic about Europe. But, you know, then when you look at it from a little bit, you know, with a bit more distance, really, then you have to say, well, you know, Europe hasn't been doing so badly. Yes, there was a huge crisis, and yes, we are seeing the fallout, and yes, there is a lot of division. But Europe is, expert in dealing with that. Europe has had a lot of very bad experience of interaction, and of conflict and war, but it has developed a lot of institutions that are quite expert at managing sharing of power, at managing compromise, at getting to solutions, and this is also what Europe has contributed to a certain extent to the world in terms of multilateral institutions, in terms of world order, support for open world order. And so from this stepping away a bit from this perspective, I would say, Europe is not to be discounted. And I agree that, Brexit was a really, really strong test of European unity. And, it's quite amazing that the British Parliament on a daily basis is challenging Europe, because that's what they're doing. They're always saying, oh, you give us a better deal, give us a better deal. Basically, and yet Europe is standing together, and that was not necessarily the outcome that certainly in Britain was expected. So I'll leave it there.
Thank you, Béatrice. There's one word which I think we have not mentioned yet is secular stagnation, which certainly is going to have a big impact on this issue of who is going to be the leader. So Europe and US potentially are experiencing secular stagnation. We've talked a lot about China, and we had long-term views about China, but I'd like to have your opinion on to what extent what we're seeing in China with the slowdown of growth is short-term phenomenon, or something which in some sense is bringing some convergence of China towards the other countries, but towards a slow rate of growth, and converging also towards secular stagnation, which certainly change a lot the narrative that we're having. So if, Béatrice, I'll start with you then in this case.
So, my perspective on that is still the catch-up perspective. China is a medium-income country, although it may seem a high-income country in many places, but overall there is a lot of catch-up that China still can do. And so from that perspective, I would expect higher growth rates than at the frontier. But this does not include that there are more bumps in the future. Because we have quite a number of things that can be worrying, including the credit growth again and again, trying to stimulate an economy above a certain level that may not be the one that is sustainable, and therefore there may be instances where we experience stronger setbacks, but over the long perspective and in terms of potential growth, China's growth rate should be higher than the one of the US or Europe.
So, Philippe, what if the frontier itself is slowing down?
Sorry?
If the frontier itself is slowing down, what is the consequence potentially for China in this case?
Can I answer to the first question, secular stagnation, if you like?
Choose your questions.
No, because I wanted to add something, because I agree with what you say. But when we look at the headwinds for secular stagnation, you have productivity, of course, you have demographics, you have the accumulation of debt, and in these arguments, China is not necessarily a better place than some other countries, including the US. First. Second, in terms of potential, in terms of effective growth, China is developing, and when the countries develop themselves, gradually growth is slowing down and potential growth is lower. So if you mix these things, probably today, as we speak, but it's difficult to calculate because we are lost with indicators, but probably potential growth in China is around 5%. And probably in 10 years' time, potential growth should be around 3%. So growth is declining, but at the end, higher than the one we have in the western part.
Prakash?
I think if you think about ultimately what's the phenomenon of secular stagnation, it's where you have very much a large savings investment gap, and it's an economy which has kind of excess savings, and in a way that's manifested in a kind of a market clearing interest rate which is very low. I think the forces in China actually could be moving in the opposite direction. I think the growth dynamics in China over the next few years is one in which actually the savings rate is going to come down. And so, and actually, even though demographics is a little bit of a barrier on the, kind of call it the extensive margin, you have that intensive margin of urbanization, which relative to where China is to most other countries at its stage of development, it still has some ways to go in terms of urbanization. So kind of tapping that intensive margin of utilization of labor, it still has some ways to go. I think that problem is much more evident in Japan, in Europe. In the US, I think the challenge is you are basically almost one recession away from being back at the zero lower bound. So I think this kind of low interest rate environment in the developed economies is going to be, to me, at least in financial market space, the most defining feature for the next, call it 5 to 10 years. And I think that is more than just a issue for the pricing of risk. I think it's an issue for the aging population and how people really think about retirement savings. Most countries, in fact Singapore included, you don't even get a positive real rate of return on your savings account. And so in order for people to really save for retirement, you've got to take risk. You've got to take risk, you've got to think about asset allocation, and most people are not equipped to do that. So that's kind of secular stagnation phenomenon, I think, has much longer lasting implications, but much more for the developed market than I think for this part of the world.
Taimur?
So since the theme of the session is leadership, let's ask the question from a leadership perspective. Which central bank in the world is taking the leadership in addressing these structural questions? In the US, I think Olivier Blanchard for the last 10 years has been talking about how if you, as a central bank, are undershooting your inflation target year after year, there's something going on. You need to be, a bit humble about the fact that your forecasts are systemically wrong, and maybe you should be overshooting sometime, and that's the signal you need to give to the market. So far, the Fed has had very little buy-in of that, till very, very recently, where the narrative is shifting, where if you undershoot for 10 years, maybe you should give the market a signal that I will allow it to overshoot for a couple of times, therefore rates will remain sort of, below what my view was ex-ante neutral. So the US is sort of belatedly getting there. And I bring this up because in the context of PBOC, both in 2008 and in 2018, when the rest of the world was saying things are kind of okay, PBOC was basically the first central bank that moved to say things are not okay, and we're going on DEFCON 3. So if you remember, in 2008, ECB was hiking rates when PBOC was in complete emergency mode and flushing the market with liquidity. So while the West was still debating how deep the subprime crisis was on a systemic basis, the Chinese saw the writing on the wall and moved before everybody else, at least definitely in the most aggressive manner. Of course, they didn't have to go down to zero bound. They didn't need to do that. Similarly, in 2018, as recently as October 2018, the Fed communication was, we are way below neutral mode. Monetary policy is on autopilot. Fed funds rate, 3.5% is what we're thinking about. Dot plus and everything. Within 6 weeks, the Fed changed its mind. When did the PBOC go on dovish mode? January 2018. So let's not give PBOC too much credit. They have domestic concerns to worry about. They're not looking at the whole world. And they have issues with credibility and communication. They have all sorts of issues. But in these two examples, in my view, if we're thinking in terms of leadership, in terms of which is the major central bank in the world first taking action to deal with the fact that there is a cyclical slowdown coming, it's been the PBOC. Now, going forward, as the secular stagnation hypothesis gets more credence, and I think the new paper from Summers is a very systematic approach towards sort of establishing the empirical evidence around secular stagnation, I think the Fed narrative will shift. But they would not be the first one. Others have already moved.
Okay, thank you. I have an impression we're overburdening the central banks with a lot. I mean, they were supposed to be in charge of inflation, and now we're going to ask them to be in charge also of combating secular stagnation. That's going to be a hard task. Okay, we haven't talked at all about trade and trade wars and how they affect our debates, but I don't want to go in that direction immediately. I'd like to ask the audience to go for questions. Danny?
Thank you, Philippe and panel, for a wonderful session. I wanted to pick up on something that came out most explicitly in Taimur's opening statement, but that was implicit in all of the panel and in Philippe's introduction as well. And that is the nature of the leadership that we're looking for in the world economy. Now, Taimur made very clear that there were different ways in which we use the word leadership. Very unfortunately, in English, we overload the term leadership with who is number one in brand sales, GDP, and so on, with who sets the agenda. And these are very different functionalities. And I wonder if in talking about leadership the way that we have done, we have not made clear enough that what we're looking for in terms of leadership in the world might be something completely different from what traditionally we viewed it as. Because we have to remember, the reason that there was even a notion of a leader of the world economy came out of the Great Depression. And after the Great Depression, in the analysis of that, Charles Kindleberger thought what a wonderful thing it was to have a global hegemon that would be the lender of last resort, consumer of last resort. And then that expanded to become the world's security officer, the world's provider of soft power, and so on. I wonder if when we talk about new horizons for the world economy, we shouldn't go back to basics. And we go back to basics in terms of what do we want from leadership in the world economy. The reason we ask that is not because we are beholden, like some school children, to a military line of command that looks to the leader of us. It is because we think leadership solves public goods problems, right? That's what Kindleberger and the Great Depression was about. So if we're now asking for leadership to solve public goods problems, why do we still look at a single nation to do that? Yes, America has, for the last 70 years, been the consumer of last resort, been the world's security officer, been the world's international financial regulator. But why do we need an aircraft carrier to regulate financial markets? If you want to regulate international financial markets, as Prakash says, come to Singapore. If you want to save the world from a Martian invasion, yes, invite the United States to bring out its jet fighter aircraft and its naval battleships. But why not separate leadership into who can solve the public goods problems, make it a challenge of expertise rather than machismo and military might? My question for the panel is, can we be creative? Would you support a new vision of leadership for the world economy?
Thanks, Danny. And in terms of public goods, so clearly financial stability and climate change would be on the agenda of these international public goods. Who wants to react and answer this hard question?
I'll try. I mean, when you talk about leadership, the way you just have talked about setting the agenda, then and when we look around the world, then the answer is G20 right now. And how do we feel about G20? Has it done well or not? I mean, certainly the start of the G20, born out of the financial crisis and reacting in a coordinated fashion to prevent further implosions of banks, cross-border banks, as the Lehman had been, by basically announcing that there would be no such, that governments would step in. That was, and at the same time coordinating on a fiscal response, that was a very powerful start of the G20. But how well has the G20 done since then in setting the agenda, in really being able to coordinate on the big issues that have, that the common goods and the public goods and the problems of spillovers? Has the G20 really delivered so far? My personal opinion is not really. Somehow the G20 has this rotating leadership going around different countries. Now it's the Japanese, and then it's the Argentinians, and the Argentinians are in crisis themselves at the same time. This is not an ideal setup for a agenda-setting body, I would suggest. And there are plenty of better solutions. And there are plenty of proposals for better solutions. But right now, it is very hard to get there because of this my country first approach that so many seem to have. Setting common agendas means that you cannot have a view of my country first. And let me explicitly be on one of the... You said, when you want to know about how to regulate financial markets, come to Singapore. Yes, this is about understanding how to do it. But then to agree on the financial regulations across borders is not that easy because there are interactions. How did the world do? Let me be very concrete. How did the world do in terms, after Lehman Brothers? It was obvious that the failure of one global bank had huge cross-border implications for the rest. So therefore, orderly resolution of first of all, preventing global banks from failing, but then if it happens, an orderly resolution regime would be absolutely crucial for the world. How well have we done in terms of implementing that? Well, the truth is there is no really global solution. It has fallen back to, jurisdictions, individual jurisdictions, ring fencing ultimately their own markets, and that is certainly not the best solution because at the end of the day it was too hard to agree not on a common agenda but on a common implementation.
Yeah, so global cooperation worked pretty well in 2009. And then I agree. I mean, it went down from there in terms of climate change, in terms of financial stability, etc., etc. So I would also be relatively pessimistic and using some of your notions in terms of, yes, there's a lot of demand for what you're asking in terms of these international public goods and international cooperation. I don't see much supply, and sometimes indeed potentially leadership is important to provide this agenda. And clearly Donald Trump is not the one who is giving this, is providing this international cooperation, but he sets the agenda to some extent. That I think we all agree.
Yes, we do.
Yeah.
So, Professor Quad, the challenge of our times, which is the risk of jobless growth or secular stagnation, or even the formidable challenge of sort of the climate change, the solution for that is Keynesian, that a global wealth tax and a global transfer of income to the affected people or the affected nations. This is such a Herculean job. I mean, this is almost like a Marxist agenda for the whole world. I mean, Piketty is basically saying R is greater than G. If you believe that, then we are sort of going back to the 100-year-old theory that capitalism is inherently flawed and it implodes. And without a global tax and a global redistribution system, it's just not going to get fixed. This is such a massive undertaking. I don't think even if Bernie Sanders were to become president of the United States tomorrow, that he would be able to lead that agenda globally. So I share your pessimism.
There's another difference between R and G, and that's the one that Blanchard is pointing to, that interest rates are low today, and so that's the reason why, maybe not even with an international cooperation, at the national level, you can indeed have some of this Keynesian fiscal stimulus to fight secular stagnation. Maybe we want to take another question. There was a question up there.
Good morning, everyone. I have a question. This early morning, I was talking to a couple of new friends I met here about this Pepsi Britannica, Pepsi Americana. Now it's Pepsi Seneca. You know what I'm talking about?
No, actually, no. I'm a bit lost. So you have to maybe make it a bit clearer.
Pepsi Britannica.
Oh,
GX,
okay.
Pepsi Americana. Now it's Pepsi Seneca. From the transformation from Pepsi Britannica to the Pepsi Americana, there was chaos. There was a lot of war. Do you think, everyone here, is it a peaceful transformation or not peaceful transmission from this Pexi Americana to Pexi Seneca?
Yeah, so typically, historically, I agree that the shifts have not been very peaceful from one leadership to another. And in a sense, these tensions are both cause and consequences of the shift. So how do you see, what is the most dangerous in some sense? The economic wars, the political wars, potentially even going towards military wars, which would be, of course, devastating. But how do you see the dangers and the risk in these changes in leadership? Nobody is rushing to answer that.
The most dangerous is by far military wars, but thanks God, we think we are miles away from this situation, but we pray every day. Second, on the commercial war, we have a trade war. Personally, I'm not negative on trade war for a couple of reasons. The first one is that it never worked. It never works. US entered into 6 or 7 trade wars since the mid of the 19th century, and at the end it was a disaster. You certainly remember Ronald Reagan. He entered a trade war versus Japan, and he won he lost the war very quickly. He retreated. George Bush in 2002, he did the same, and after a few quarters he retreated because it was inefficient in terms of growth, in terms of employment, in terms of trade. And at the end, you know what? Trump will retreat. He will. He has to, because the impact will be negative. So I would not pay attention too much. Of course, the momentum is very negative, and particularly for Europe, because the pending issue is, will it tariff automobiles or not? If it does so, it will be a disaster for Europe. So military war, of course, war will be the most dramatic situation. Trade war with different things. It's difficult to answer to your question in the sense that, of course, we can have everything, but at the moment, the momentum is very negative because of the trade war or the so-called trade war. But it's not the trade war today. It's US versus China, US versus NAFTA, but it's done. And we have US versus Europe, but we don't have Japan versus Europe, China versus Europe, etc. You have to remember the day when US entered a trade war, there was a meeting between Chinese and Europe said, no, we don't want to change anything. We have free trade agreements, and we continue. So we have a risk in short term, but long term to enter a trade war, to me, doesn't make any sense. So the problem is, with the United States, the problem is that they don't lose the power. They don't want to share it. It's the only reason. You know, Europe, they are ready to share because we don't have the power. And that's why the intentions between Europe and US to China are very different. We don't mind to say China is a market economy. Of course it's not. But we hope that in 10 years, 15 years, 20 years, 30 years, that's why I mentioned we have to be patient. At the end, it should be a market economy. And we had a very animated debate yesterday. Is it possible to have market economy with a dictature? Without a democracy? Maybe it's a new model. Maybe.
At the same time...
just one quotation. 10 or 15 years ago in Davos, there was a panel on the future of capitalism. And there was, of course, an American, a Japanese, a European, and there was the Prime Minister of China. And the guy said, oh, you have a question about the future of capitalism. You don't know what it is. It's very simple. Look at us. You will have the answer in a few years. We don't have the answer to this, but we can consider that at the end, we are moving to this target, a market economy in China, probably with a democracy which is a bit different, certainly, democracy which is different. So personally, I don't think that we are entering a military war, a full-scale trade war. But of course, we have a difficult negotiation. And to answer your question, Europe is certainly much more multilateral than the United States. We share the power in Europe. You remember when we create euro, a lot of people say it will not exist because Germany will refuse. And they were the first one to accept. One man, one voice. But one man, one voice.
At the same time, I have the impression that sometimes the Europeans are free riding a little bit on the Americans, especially on the way we don't like their method with the Chinese. But I think we are relatively happy with some of the questions they're asking. And So that's, I think, a little bit of issue of free riding on the trade wars of the others.
It doesn't mean that we disagree.
No,
but
no.
we don't want to do it.
We don't want to do it in this way, certainly. Anyone else on this?
You know, I worry a little bit about the nuclear deterrence not working out very well. We always thought countries that have nuclear power will never fight each other. But China and Soviet Union had a war in the 60s. The Indians and the Pakistanis just had cross-border incursions over each other's territory, and they're all nuclear powers. The chance of an adventurous U.S. Navy commander crashing his ship into a Chinese Navy ship on the South China Sea, in my view, is quite possible. And that could lead to low-intensity skirmish between the U.S. and the Chinese. So, yes, we're not close to serious wars, or world war, anything like that. I don't think the Americans still consider the Chinese as an existential threat in that military sphere. But low-intensity conflict between the Chinese and the Americans, I don't think it takes a lot, and the tensions are already very high.
Yeah, so we've seen enormous amounts of tensions, political tensions. Trump is clearly a huge uncertainty shock, predictability shock, political shock. What I'm amazed by is, in some sense, how, for the moment, the economics is not so sensitive to that. There's not been a, this has not generated a recession for the moment. We economists think that typically an uncertainty shock should have a huge impact on investment. We haven't seen it very rapidly. It's coming maybe in a slow fashion, but yeah, maybe. But still, I'm amazed by the fact that the economy is still quite resilient and has become more resilient to political uncertainty up to now. I'm aware of that. Okay, it's 12 o'clock, so I think we should stop here. Thank you so much to the panel. It was very, very interesting. Thank you.